Welcome back, everybody, to Talking Stocks. Joe and Todd with you here as always. Todd, good to see you once again.
You too, Joe.
Yeah, so we've got a few different things to talk about this week, but I wanna get started talking about Bitcoin and specifically Tesla's new kind of venture into Bitcoin. I realized I don't think we've ever talked about any crypto on this podcast before.
First time for everything. Yeah.
First time, yeah. Although we are talking stocks and not talking crypto, but we'll cover it because it's important for Tesla. So yeah, why don't you fill us in on kind of what happened with Tesla and Bitcoin this week?
Well, first, in case you don't know, Bitcoin is a digital currency, right? There's fiat currency, which is what we're used to, right? That's the US dollar bill, that's the euro, that's whatever in your country you're in, there's money and you use that in exchange for goods. And you could go back, I think that the story of Bitcoin is pretty interesting because you go back, there's precursors to Bitcoins. I think as early as the early 1990s, something like that, there were people talking and writing papers about, wouldn't it be cool if there was this digital currency that kind of crossed all borders, reduced friction, and was basically, pretend that the world is all one. Kind of like what the individual currencies kind of disappeared a little bit when the euro kind of bonded them all together, right? So, I mean, you still can have those currencies, but the euro could be used across every single border. And the whole concept was, in a technological world that's going to get bigger and bigger and more united, and borders are going to fall apart, and having some sort of currency like that can be tracked digitally and controlled digitally and protected might be valuable. And sure enough, that's kind of the argument that we've seen play out. Bitcoin getting launched, I think in 2010 or something like that. So it's about 10 years old, something like that. Yep. That's been the argument all along is, initially it was kind of shady, oh, this is a way for me to anonymously exchange, for illicit activity or something, right? It's moved much more mainstream, as one would expect to do, as, again, people have gotten more and more technologically savvy and started to kind of connect dots and say to themselves, well, maybe there is something that would be more beneficial to have this kind of currency that I can use that's not really a currency, it's going to be different, it's going to insulate me against maybe individual country risk, economic risk, the US dollar moving up, some sort of a different medium. People have oftentimes compared it to gold as a storehouse of value, if you will. I mean, the argument being that, yes, gold isn't really exchanged, but theoretically there's a value attached to it, that you could take a gold bar and someone would give you something in return for that gold bar, right? So, I mean, it's similarly, if you have this Bitcoin, as long as someone is willing to give you something in exchange for that Bitcoin, right? So I don't currently own Bitcoin, and a lot of people have been very, reluctant to step into this. It's probably the gray hair on my head. I continue to look at it and say, but how do you value it? How do you, what is it really worth? I mean, what happens if everybody all of a sudden decides they don't like Bitcoin, but they like Ethereum, or they like, one of these other digital coins or whatever? I mean, it just seems like another market with a lot of participants where Bitcoin is the leading participant in it. That's the way it kind of looked to me for a long time, as I've put more and more thought into it. And of course, you got to listen to price. I always listen to price. Bitcoin keeps going up and it keeps getting more validity because more and more people are moving to it as a platform for, for those reasons. So like the decision by Tesla really was a turning point for me.
Yep.
Because I looked at it then and I said, okay, if companies are going to get on board and believe in this as a viable platform for investments, because remember, big companies sit on a lot of money for a lot of different reasons, and they've got cash flowing in, flowing out, and they've balanced cash on their balance sheet. Well, that cash is earning relatively zero right now, right? So they invest some portion of that usually in short-term securities and that type of thing, to kind of give themselves a little bit of a return. And of course, Apple, has probably that's the Goliath, right? With so much money on their books that they can do something with, right? And so I looked at this and I'm thinking about it. I'm like, Tesla's decision to do that really, I think, does provide a level of validity, easy for me to say, to Bitcoin and to digital currency. I think that it's still, it's a nascent market. People will look at it and say, well, it's gone from 3,000 to 40,000, but you really can't look at it that way. You have to look at it in the same thing with stocks, right? Same way you look at stocks. You don't care if a stock's doubled from 3 to 6, right? Imagine if you gave up on GameStop, just an example, at 6. Hey, I doubled my money, right? And then it went to 400, right? I mean, you can't really look at it as if the price performance in the past is the only price performance there's going to be. Many people like me who have accounts of a decent size still don't own Bitcoin, right? And so you have to look at it as being, what percentage of the market share of investment dollars has Bitcoin achieved? Kind of like when you're looking at Tesla and you're saying, what percentage of cars on the road are electric vehicles? Right? So you're saying to yourself, well, what's that addressable market, right? And if the addressable market is some percentage of everybody's assets, what percentage of those assets has Bitcoin achieved? It's a very minuscule, arguably, I think, a very minuscule number. And it could get obviously much larger if other people follow in Tesla's footsteps.
Yeah, I think that there's definitely a barrier to entry for frankly older folks, people older than myself, we'll say, because it's a lot for somebody, for a novice to wrap their head around the whole concept of blockchain. I don't even understand it. And I think there's still a really strong case against investing in crypto, and frankly against the whole future of crypto. Why are you going to want to use a currency that fluctuates 10 or 20% in a day? Like, that's not stable. That's a gamble at that point. You're just gambling. It's the same thing as like buying GameStop or AMC theaters. So
yes, the greater fool theory is what you're worried about, right?
Yeah.
That you're not the last fool that you can't sell to somebody else at a higher price.
Right, exactly. So I think that, from an investment standpoint, I'm sure that Tesla's billion or billion and a half, whatever it was, investment in Bitcoin will pay off in the long run. I'm sure it will. But their decision to accept Bitcoin as payment for their vehicles, I think is a little bit strange. And maybe I'll be laughing at myself if I go and watch this episode in another 5 or 10 years. But right now it seems somewhat fishy. And when you first kind of got started, you had mentioned that there was sorry, I just lost my train of thought. But anyway, point is, it's a strange play. It's definitely Elon Musk. It has Elon's name written all over it, right?
Well,
the guy who has Bitcoin in his Twitter bio.
Yeah, I mean, and that wasn't always in his Twitter bio. So, one of the things that's interesting about Elon is he kind of tells you what they're doing or what they're thinking without telling you what they're doing or what they're making these comments, and you're like, he's been commenting for a good solid, increasing his comments for a good solid 4 to 6 weeks. And sure enough, Tesla, that apparently was in there buying Bitcoin in January. So I think that was very interesting to see that happen. One of the things I think you touched on was there's a complexity to getting started in Bitcoin.
Absolutely.
Right? Because it's not like you have your regular brokerage account. You can't just go in and buy cryptocurrency. I mean, one of the reasons, the barriers to entering, and we can talk about marijuana at some point too today. One of the things that has been a barrier to entry is that because of rules, laws, regulations, a lot of these custodians and a lot of these brokerages and a lot of these banks don't want anything to do with this stuff. And as a result, they're saying, nope, not here. You can't do it here. So, I mean, there's backdoor ways you can do it. You could buy the Grayscale Bitcoin Trust, which I think the symbol there is GBTC. as kind of a backdoor way to do it. I mean, it's kind of, think of it like I guess the best way to think of it is kind of like an exchange traded fund that pools together people's money and then invests in underlying Bitcoin. Now
Yeah, like GLD or SLV.
SLV, yeah.
Yeah,
So yeah, so maybe, but just like SLV and GLD, you don't own that real asset.
right.
You own the shares in the ETF, and everything goes south. No one's going to take those ETF shares from you. It's not like having a gold bar in your hand. So the argument then would be, no, if you're buying it as a speculative piece of your portfolio, and honestly, in any of these things, I mean, my rule is for entry is 3% of my portfolio for a new position. So that's, you really shouldn't have more than 3 to 5% in something like this for the reasons you outlined. What happens if this thing goes down to 10,000? What happens if it goes up to 100,000? You make money. Great. Way. It goes down to 10,000. If you put all your life savings into it, you can have a real problem on your hands.
Right.
So you never want to invest more than you can risk losing or not having access to when you need it, right? So that's something to keep in mind. But there are these other platforms, if you don't want to buy the Grayscale Bitcoin Trust, GBTC, there's other platforms that you can take a look at that are established themselves. Coinbase, I think you had mentioned prior to the show, is the one you use. And I think I read today that they're planning on IPOing in a direct listing at some point this year.
That's been rumored for a while. Yeah, I assume they're the most popular platform, and they do a pretty good job. I opened an account with them back when that first bubble happened. What was it, 2017, I guess? And aside from my stupid investment that I made, that I've lost a ton of money.
Pull up a chart, Joe.
Sure,
People can
sure.
see this, and then talk to us about your experience in opening up that Coinbase account.
Sure. So this is a Bitcoin chart. I just pulled this off of Yahoo Finance because unfortunately Todd's awesome charting service does not chart cryptos yet. Definitely should though. So you can see this is the last 3 months. We've gone from, a little over 15,000 up to peaked at 46,000 on Monday, which is just insane. Does give off some pretty strong GameStop vibes, I must admit. And just going back to what you had kind of touched on before, my biggest concern right now is that if you expand this chart out, right, you just look at this and it's borderline parabolic. And there's just, if you enter it right now, there's just so much room for that to fall. And who knows? I'm not saying that it's going to drop down and become worthless, but you look at last March and it was down below 10,000. So I think that there's a lot of kind of Wall Street bets, sort of funny money in it right now. It's mostly younger people who frankly don't really know what they're doing. Like when I opened up my Coinbase account when I was 18, very, very similar people who are really just suffering from FOMO. And you wanted me to kind of touch on my experience with Coinbase. And that is literally the only reason why I opened a Coinbase account, is because of FOMO. So expanding this out, also just a side note, I was not investing in Bitcoin. I was investing in a different coin called Litecoin, which is a similar platform to Bitcoin. Their prices are very tethered to one another, and it's essentially just like a cheaper version of almost the same thing. So this is 2017, and yeah, I'll admit it, I bought right about there. So it's been a rough few years. I'll probably exit out of it and potentially even close out that account in the next couple months, depending on what happens. So yeah, that's
I mean,
Bitcoin.
Looking at that chart and just thinking a little bit out loud here. So first off, was the process pretty seamless for opening up at Coinbase?
Oh, it's very easy. It's just like opening an account with any online brokerage these
Similar
days.
to like a
It
Robinhood?
Yeah, even when I open my account on Fidelity, it takes like 5 minutes. It's so easy. Um, I I remember there was some sort of identity verification. I don't remember if it was like social security number or something, but it's pretty secure. It's not sketchy. The app is it's very sleek. They put a lot of work into the app. Um, but
And
yeah,
so, yeah, I mean, in this day and age, right? I mean, user experience is important. I imagine most of
yeah,
these. I was looking at some great feedback yesterday on my Twitter at EB Capital. I was asking the question, where do people do their trading? In I got a lot of great responses. It was interesting. Shout out to Mark Fitzgerald, who was one of the ones who engaged with me on Twitter and shared with me some thoughts. And you know, he was talking about the different platforms that he's used. There are expensive relative to what you might be used to in buying individual stocks. I think that, you know, just on a couple grand would be like a $30 cost if you were on Coinbase. Binance, which is another one that he had mentioned that I wasn't familiar with before, it seemed to be the lower cost alternative. There are some exchanges that let you earn interest by lending out your crypto as well, which is kind of an interesting developing market opportunity. I mean, it's like, okay, so I buy some fractional amount, because I mean, people, like for most people, you're not going to buy a full Bitcoin, right? So you buy a
right.
fractional amount of Bitcoin, right? And then theoretically, you could lend that Bitcoin out and earn a return on it. I imagine that creates some risk on its own, but it also probably offsets a little bit of risk on its own too. So, I mean, it's like anything else, right? It's speculative. So, I mean, you have two different ways that you can approach it. You can say, okay, well, this is like the gold bar that I'm sticking underneath my bedroom floor for a worst case scenario, and I'll own a little Bitcoin as a worst case scenario, and I'll just sit on it, and whatever happens with it happens with it. Again, making sure not to invest any more than I can afford to lose on it. And then there's probably that other point that you were making earlier, where it's the speculative trading kind of frenzy, where you say to yourself, okay, well, there's some FOMO going here. Maybe I wait. You know, in the chart that you had up earlier, it showed some pretty good support around 40,000. That's probably where I would enter.
Yep.
If we got down, contracting, excuse me, to about that 40,000, I would probably take a little bit just to see if it held or not. And then with some risk control discipline, I would probably exit out of it if it got below X number. I'd have to see what kind of costs I got on it. And, you know, again, I'm not going to be putting a lot of money into it. It's just going to be one of those things I'm going to dip my toes into. But you know, I think that those are the two different ways to approach it. And then just recognize the other part of it is, where do you store it? Right.
Yeah.
So on Coinbase, Joe, I'm assuming you're just leaving it in Coinbase.
Yep. It just stays there. It's just like a brokerage account for cryptos.
Yeah, so it's just, so you can do it just like that. But you know, some people on Twitter responded back to me and were like, "Yeah, that's risky because what happens if you know, there's counterparty risk, right? What happens if XYZ exchange goes under? They're the ones that have the keys to your Bitcoin. So you know, do you really trust them to be able to stay in business, right? So I mean,
Yeah.
you have to consider that too. There is a way to open a separate vault that theoretically you can buy it on exchange and transfer it to a vault. There are some custody costs associated with holding it at those vaults. So there's a lot of different moving pieces to it. And I think from my perspective, wanting to just kind of dip my toes in and get familiar with it, I would probably just do the simpler route, which is just trust that the exchanges are going to be around. It may turn out that a better investment opportunity isn't the Bitcoin or the coins or any of these altcoins that exist. It may be that you want to, like many things, look at the picks and shovels plays. You know, so maybe you're looking at NVIDIA and saying, well, demand for their chips is increasing because more and more servers are out there mining for these coins, right? So you might want to take a look at kind of like what other companies or stocks benefit from potential increasing interest within Bitcoin. So that would be
Yeah.
one. If Coinbase obviously does come public through the direct listing, maybe that's another one that you'd want to consider.
Definitely worth a look at least.
Yeah, and then again, going back to the original with the Grayscale Bitcoin Trust, the GBTC, that might be another way to consider doing it too. But to your point, It does seem to be that there's a little bit of, that's the latest thing that Wall Street Bets has been focusing on, that and maybe marijuana stocks.
Yeah. So since you brought it up, let's talk about it. So I had tweeted out and retweeted on the Limelight Alpha account yesterday. I learned kind of an interesting lesson. So I've owned this ETF. Todd, if you could actually pull up the chart for MJ, that would be awesome.
Absolutely.
So this is a cannabis ETF that I've owned for a little over a year. I actually thought it was longer than a year, but Fidelity tells me I bought it in 2020. So, okay. Uh, and I owned not a ton, and I had bought it at, I don't know, 16, 15 a share.
Yeah, I mean,
And
it looks like that probably would have been either early last year, mid last year, or late last year. You were kind
yeah,
of into those areas.
yep. Yeah. So I bought it at around 15 or 16, and it had been a laggard in my portfolio for a long time. And then obviously with the election in November, and then more importantly, the Democratic Senate majority uh, from that special election in Georgia was in January. As you can see, it's gone to the moon since then.
Yeah, what was it? First week of January was the election
Yep.
results were issued. You can see where the stock is here at 17, and it's already moved up 70% from where it was last fall. And you probably had a lot of people saying, well, the news is out, it's all done. You and I actually did a show where we talked about the winners and losers
We
at
did.
Georgia. So listeners, go back and you can listen to that show where we talk about marijuana as having some pretty big tailwinds now based upon that decision. So you've now gone from 17, just interrupting you shortly there, Joe, going from 17 up to 31. So if you
Right.
thought you missed it, you hadn't missed it. You
So
literally have bought that day.
here was the lesson that I learned yesterday morning. I was looking at the chart before the market opened. It was sitting at about 26 and a half. Um, and I had looked at the way it had moved in the previous couple days. And a lot of times what you'll see is, especially with a really volatile stock or an ETF, side note, I think it's remarkable that this ETF with 30 or 40 different holdings has spiked up as much as it has in the past few weeks. Anyway, I looked at it, it was at 26 or 26.50. So at that point I was up at least 50%. And it was at its all-time high. And I've been really hesitant to buy stuff at all-time highs. It doesn't quite seem right to me. You know, what if there's no proof that it can maintain that price? So I decided to kind of counter my usual logic, and I expanded my position yesterday morning at market open, got in at about 27, and ended the day up 8.5% on that investment, aside from my initial position. Now, the next day, it's fluctuating right now between 8 and 8.5%. So now I'm up between 16 and 17% on that initial investment. So yeah, patting myself on the back a little bit. But the reason why I bring it up is not to brag, but to really put forth a great lesson that I just learned about buying. And so I wanted to kind of expand this into a general sort of discussion about buy strategy, because I know there are folks out there like me who see whatever stock it might be, whether it's one of these cannabis stocks or honestly anything. This applies to anything. This applies to the SPY, this applies to gold, this applies to Bitcoin. So I think a lot of people out there are hesitant to buy when there's no track record of support at an all-time high. So how do you suggest, Todd, that people kind of overcome that hurdle?
Yeah, this is the natural progression in development as an investor, right, Joe? I mean, this is the natural progression. I mean, this is typically speaking in the life cycle of an investor. You start out thinking, oh, I've got to buy things cheap, right? I got to buy things on sale, and that's the best way for me to make some money is to buy things on sale, buy things that are cheap, right?
Especially when you're young and you're working off of very little capital.
Right. So you think to yourself, okay, I'm either going to buy these are mistakes that we learn and we evolve out of. But you say to yourself, okay, I'm going to buy a cheap stock as in price. Oh, I'm going to buy penny stocks, right? Or you say to yourself, I'm going to buy a cheap stock in PE ratio. So you say, oh, the price divided by the earnings, look, it's only trading at 3 times earnings. The problem with that is it fails to understand that P ratios are, there's 2 different components of that, the price and the earnings, right? And oftentimes the price leads the earnings, right? People ferret out that a company's in trouble and start moving away from that company, which makes the P ratio fall because it's based on trailing earnings. That's why in our research model, we always look at forward earnings projections, right? But even those are slow to drop. So then the bad news starts to trickle through into the business, the fundamentals start to deteriorate, and guess what happens to that P ratio? It starts to climb.
Yep.
Price doesn't climb, but the P ratio starts to climb because there's less earnings, right? So these are all part of these things that we learn. Now, what you embraced with that purchase of MJ here is you embrace that kind of William O'Neill study and Stan Weinstein, some of these other really famous investors who've gone back and actually crunched the data to find out, no, not what I think or anecdotally may give me the best return, but what does the data tell me? And invariably, the data told them that when you're much better focusing on stocks that are breaking out to new highs than you are trying to buy lows or pick lows or bottom fish or whatever. It makes you, the win rate is substantially better. Now you have to balance, and this is the next part of that evolution. You have to balance not only the buying of new highs, but knowing when to buy those new highs, right? And also putting risk controls in place so that, because 50% of breakouts to new highs fail. I think that's important to remember.
Yep.
The 50% that work, that make you a boatload of money. So the key here is to eliminate the ones that don't work relatively quickly, right? And let those ones that do work mature to some point. And from O'Neill's studies, the mature point was 20% from the breakout. So if it moved 20 to 25% above the breakout, that we call the pivot level, then that would be a point where you could start to rein in risk. I think Stan Weinstein, in his book, he was talking about when you get a vertical move, like we're seeing now. I left this chart up because I wanted to show this. So if you're on YouTube, you're seeing this. If you're not on YouTube and you're listening to Anchor, you can view the charts by going to our page, Limelight Alpha page on YouTube. When you get verticals like this, especially, who was it? Marty Schwartz talked about, I think, 3 moves up, and then you start to get nervous of a pullback. So you don't want to be buying on that 3rd day of that rally. So maybe you're not buying it today. Maybe today you're just sitting on your hands and you're saying, okay, let's see if it back and fills a little bit. You've got some gaps to fill down into the low 20s. Who knows? It may not go down that far. But if you get it down 5% day, that's typically what I use, Joe, is I say, okay, if there's a stock that screens high in our research that's had kind of this big spike move up and I'm not involved in it, but I want to get involved in it, I add to my watch list. And when I see it down 5%, all things else considered equal, right? Depending on the market. If we're in a market uptrend, it would down 5% on a stock that's been running. That's just simply profit taking.
Yep.
That's just profit taking. So I'm willing to buy other people's profit taking in a good stock, right? So you're saying to yourself, I want to book some of this because I've made a lot of money fast, which is totally fine if that's what you choose to do, right? I'd be looking at it as not owning it and saying, if Joe's booking it, fine, I'll take advantage of that dip because he's booking it to buy it and see if I can make the next run up. So I wouldn't be buying today because of the 3rd spike up and how vertical this chart is. Another stock that I actually own, I'm up 1,700% now, Joe, in this. 1,700 in a year.
Oh my gosh.
I think I bought it in March. I think I bought it in early 2020 at 10. Fulgent Genetics. It's a genomics play that expanded the revenue significantly last year because they pivoted to be able to do COVID testing for a lot of municipalities and universities and the like. And as a result, the earnings shot through the moon. The revenue shot up 883% year over year last quarter, which is a stupid numbers, right? And people now, because this is a very thinly traded, it only trades, let's see, I think the float is like 13 million share float, very small compared to something like, say, NVIDIA, which has 588 million shares floating. So there's not a lot of liquidity out there. So you look at Fulgent, you say, wow. So again, would I be a buyer here? No, I would wait. So you look at this big move, 1, 2, 3, 4 spikes up, right? And then pulled back almost the entire move, flagged out a little bit, pennant, and then boom, back out again. So you kind of look at it and you say, okay, well, I don't need to buy the spike. I can wait. And we'll show some other examples. I'll show some other examples because you wanted to see some ideas of, okay, how do you buy entry? So this is a stock that's been very high scoring in our research for a while, right? And again, if you're on listening, I'll do my best on the podcast. If you're listening on Spotify or Apple or one of these other great platforms, I'll do my best to try and walk you through it. But we're looking at the chart of Digital Turbine, APPS. So Apple, Peter, Sam. And this is a company that it allows for the monetization of apps on smartphones. And they're also getting into a little bit of the over-the-top advertising as well. So you talk about the 5G upgrade cycle, people tossing out their phones, getting new phones in. That's a great opportunity for Digital Turbine service to be able to help for the discoverability of new apps and stuff and capture revenue from those developers by enabling this. And you can see that the stock obviously has run up substantially from $14 a share last summer to $88 where we sit today. One of the things that I will always look at, and you'll notice on my chart, right? If you're looking at my chart, there's 3 trend lines I have under here, Joe. I have a 200-day, I have a 50-day, which is the red line, and I have the 21-day, which is the green line. So what I typically do in something like this is say, and I happen to own this stock, long this stock. I didn't look to see when I bought it, but I want to make sure everybody knows that I am talking my own book here. I do own this stock. So what I would be looking at here isn't necessarily to buy it on the breakout above a huge number, but to see if it pulls back to one of these key levels. Oftentimes you'll find that stocks will find support, buyers will emerge and support the stock once it retreats to one of these levels. So story first, why do I like Digital Turbine? Because of the 5G upgrade cycle, right? That's my story first. So that's my thesis, right? The reason I want to own this company is because of that upgrade cycle, right? So then I'm using these technical levels to try and figure out my entry points and my exit points, right? So what I'd be looking at here is if I'm interested in this stock, I'm looking to see if I can buy it either at the 21-day or at the 50-day. And don't try to nail it right on. Allow wiggle room on either side of these moving averages. Because as you'll see in these charts that I'm going to pull up, they will undercut the 21 and then hold the 50, or they'll undercut the 50 and they'll hold the 200, right? So again, that's another reason why I like to stair step into stocks, especially if they've been big movers, right? Big move, maybe I'm taking 1% of my 3% position that I like to do for starter positions. I'm taking 1% when it pulls back to the 21, 1% when it pulls back to 50, 1% when it pulls back to 200, and then I'm full, and then I'll put my risk control underneath the 200. Or conversely, if it holds the 21 and rallies, I'll either add as it's starting to rally, or as it rallies off that 21 and pulls back, has another down day, I'll add at that point. So I'll just continue to watch for those down 5% days as it's moving its way up and up and up that chart. And you can see on this by looking at Digital Turbine, how you held the 21-day here, but then failed, but held above the 50, recovered the 21, rallied, stayed above the 21, all the way up from 20, from probably 30 to 42, retreated all the way, undercut slightly the 50-day, rallied back to, that was like 25, great entry, back to 43, back to the 21-day, back to 50, held the 21-day ever since, a slight undercuts a couple times from 60 to 80. So that kind of gives you, that's one example of that. Another example would be stock we talked about last week, ServiceNow. ServiceNow is another stock that's been, again, same thing. You break out, bust out to the new high, break out at from 390 to 450, but it was probably on earnings, digest back to the 21-day, undercut slightly, rally, undercut, hold the 50-day, rally, undercut slightly the 50, rally, undercut slightly the 50, rally, undercut slightly the 50, rally. So you can see where you can, if you're not sure where to enter a story stock, this makes it very systematic for you. It takes a lot of the guesswork out because you can say to yourself, I'm just going to look at these levels that stocks tend to find support at, and I'm going to take advantage of those. and buy at those levels. Another stock that's a good example that is 26 Incorporated, which we talked about a few months ago as well, IIVI. They make lasers and stuff that's useful in helping to automate stuff like autonomous driving and everything else. So IIVI is the symbol there. And you can see how once this stock held its 200-day, right, rallied above the 50-day, pulled back to the 21-day, jump, escalate, escalate, retest 21, hold, hold. This is actually beautiful because it's holding above the 21 each time. There's just so much pent up demand to buy this stock. Every time it pulls back, people are coming in and buying it. And again, held again on the most recent move. And now the stock has gone from last November, 50 bucks to almost 100. So those are a few examples of how I approach when our research kicks out a name. I'll then come up with my catalyst. I'll do my due diligence. I'll figure out what my catalysts are, what my thesis is. Then I'll say, okay, do I want to buy it at the market right now? If it's near one of these key touch points, yes. If it's not, I add it to my watch list. And if we get a down 5% day, or we hit one of these touch points, roughly, then I'll go ahead and I'll take my swing. Does that make sense, Jeff?
Oh yeah, that was fantastic. Definitely, it's great to see the other end of that. I have one follow-up question for you. So this just kind of popped into my head when you started talking about, you didn't explicitly mention, stop losses, but I assume that's what you have on most, if not all, of the stocks in your portfolio. Is that accurate?
I have a long and storied history with stop losses. Many people probably do. A lot of the really talented people who've been around a long time, if you follow them on Twitter, look for people who've been investing more than 20 years. And you'll see
like Todd.
Like I have the scars to prove it.
Yep.
You'll find that some of them either swear by stop losses, or some people have been burned by stop losses enough times where they get worried about actually putting them on the books. So when you put in a stop loss, you're trying to control your risk. You're picking a particular number that you'll sell at. So maybe you're saying, like O'Neill said, 8%. Some people will say a different number. Some people will use a trailing stop. Some people will put it right under the 200-day moving average. Our research model starts to really penalize companies when they get more than 5% below the 200-day moving average. That's when we really start on the price volume part. We have 7 factors. That's one of the factors. When it gets more than 5% below the 200-day moving average, that's where we really start to penalize a score in our ranking. So, you could theoretically follow with a stop loss 5% or more below the 200-day and be like, once it breaks below that point, I just have no interest in it. I'll focus on other ideas. I do not have physical stop losses. Now, some people say that's dumb because mental stop losses put you at risk of emotional decision making.
Yep.
Right. We've talked about that a lot in past episodes where we talk
Yes.
about mindset and the importance of mindset and rules and systematically sticking to your rules and not justifying or rewriting history, right? We don't want to rewrite our thesis because we're losing money, right? We have to want to win more than being right, right? So if I feel like I can do that, and I'm not perfect, but since I feel like I can do that, I feel like I'm okay having mental stop losses. If you don't feel like you can do that, then you're better off actually trailing with a physical stop on the books. It's just that what I've found sometimes is that if it's a kind of a dull day or whatever, they'll come down to your stop loss, trigger you out, and then rally the stock again, and then you're out of the stock. And did you really want to get stopped out of Amazon? Probably not. So that's why I have, when I teach the course How to Talk Stocks, I have everybody write out their thesis. We do all of our due diligence. And the game plan is that when your thesis breaks is when you should be selling, right? Because
Yep.
if you believe in e-commerce and you believe that e-commerce is going to continue to win market share against physical retail, then why would you want to get banged out of Etsy, Shopify, or Amazon solely because it hits some arbitrary number that you picked out of a hat, right? So I think that you need to balance those things. And that's not an easy thing to do, and I understand that. But conceptually, that would be my advice to investors, is to try and find that balance between the story and your willingness to, in your need to be right, right? Because you don't want to sit in the stock. If you're wrong, you're wrong. So we had a great show, beginning of January. I think it was the sell, our sell. How do we sell? And that was one of my resolutions, right? I want to get better at figuring out my sell rules, right? And I really don't want a bigger than 10% loss on a stock, because theoretically, once I've built my full position, if I'm right, I should be proven right by the market pretty quickly, right? If I'm down 10% after buying my third tranche, say, right, then I should probably just sell it and walk away, right?
Yeah. All right. So we got a little bit long-winded there in those two segments. So to wrap it up, why don't you just give us like a quick smattering of just like 2 or 3 different stocks that are kind of piquing your interest this week?
All right, I'll absolutely do that. There were a couple that I pulled up. I'll share my screen again. We'll go back to the charts. I mentioned a couple already. One of them was
Yep.
NVIDIA. NVIDIA is high scoring in the research, and it looks like we're challenging the upper end of this band. We
Yeah.
get above this pivot here at 600. This is a pretty wide base. The bigger the base, the bigger the breakout, as the story goes. I think that this has a lot of running room, but it could digest. So you could break out and kind of like digest, pull back down in here. That would be my desirable entry. So you get the breakout, you get the pullback, and then you could go ahead and take that. A good example of that would have been Shopify, where you had this breakout above the channel back in December. So 1130 channel broke out, rallied to 1285, and then came all the way back down to 1076, bounced around, and guess what, Joe? Held that 50.
Yep.
Held the 50 there, and then boom, to the moon. So again, NVIDIA is one that I'm watching. I'm also taking a look at Site One Landscaping Company, symbol there, SITE. Owns a lot of different landscaping operations in multiple states. I think that this is a very interesting seasonal play, and I'm early on it, right? Because summer and spring, we're in New England, so not really the ideal time to be going to a landscape company. But
Right. There's a foot of snow outside right now.
yeah. But I think this is when you start to be thinking about a stock like this to add to your portfolio. So that's one that I'm watching right now, SITE. I'm in Advanced Micro Devices. And it's recovering. It's recovered its 21, and it's above its 50-day now. I want to see the 21-day start to turn back up to add conviction. There's not a lot of volume on here, so I'm kind of just watching it right now. But I wanted to mention that. And then finally, for the last one of the show, Bandwidth, which I think we've mentioned once or twice before on the show. It's bouncing around in this channel and is pulling back and retesting the 21-day. Might be an interesting buy in here to see if it can rally up and break out above $200 per share. So Bandwidth would be the final one that I would mention on today's show.
All right, great. So that was a great episode. It was good to dive deep into a couple different subjects. As always, viewers and listeners, let us know what you think. Tweet at us at EB Capital at Alpha Limelight. If you're watching this on YouTube, feel free to send us a comment. We love viewer and listener questions, so keep those coming as well. And yeah, we'll leave it at there. So see you next week, everybody.